Our trade strategy for the week, it's very simple. It's called a fundamental reversal. Now, I've shown a few of you this in the past, and I'm going to show it to you again tonight. More importantly, I'm going to show you what it looks like on a price ladder, so trading it live in the market. And we're going to do that utilizing our Trading Technologies price ladder, okay? So I'm going to show you how the entry works, the exit works, the timing works. I'm going to go through it with you, show you the observations. First and foremost, the characteristics. It's a short-term trade strategy. Okay, so if you're a swing trader, if you're a long-term trader, this isn't for you. This is short-term, fast money. Alright, you're going against the prevailing positioning. In other words, bang, fundamental news comes out. The market needs to shift in its value or its perceived value. Alright, the market positions itself one way or another, whether long or short, in the short run. Note, price reaction is the key, and that is why this is purely a price ladder strategy. Alright, you can use the charts, but it's much better to trade this off of a price ladder because you're going to get best price execution. Risk is minimal, very tight, and you've got a lot of potential upside. Why? Because when the market reverses and there's a lot of positioning on a fundamental in one direction, there's quite a lot of unwind that needs to occur, and that creates the strong upside. Strategy is simple. We entry aggressively once we see absorption. Note, aggressive entry only once we see absorption. Timing is essential here. The most important part is the reference point. Now, I'm going to show you an example of how this gets traded in a ladder, and then I'm going to show you an example that came out this week in the German 10-year bonds. So you can see the strategy not just on a ladder, but also on the charts. Let's get into it. Alright, so this is the ECB final LTRO announcement that came out not this past week, but the week before. The important thing to understand is that the expectation, just one sec guys, this doesn't seem to be too happy. Okay, give us a sec, I'm going to pull the actual ladder up here for you guys. We are having some technical difficulties today, unfortunately, but not to worry. We shall solve this very quickly. Okay, so you should all be able to see this in front of you now. The important thing, okay, the expectation was for a high LTRO take-up. Alright, the average of the banks and the big institutions, they were talking around 120 billion of new LTRO take-up. Now note, the market came out, or the expectation was around 120, it came out double, 233 billion. Now what we expected to see was quite a bit up in the periphery, and on the left ladder you can see we have got the BTPs, which is the Italian bonds, which are considered periphery in Europe. We've then got the German bonds in the middle, which are more core European bonds, and on the right we've got the Euro-Dollar FX. Okay, so note, 3 correlated markets, and they should all move in some specific direction. Now, the play was we were looking for a rather large take-up. So as you can see, I'm hovering over the bid here because I'm expecting a large take-up. Alright, so I'm waiting for the announcement, and I've picked the BTPs to trade. And the market's waiting, and eventually the number comes out. Let's just get this a little bit further forward. Okay, just another couple of seconds. Alright, so numbers out, 233 billion. I'm excited, I've gotten in. You can see that I've hit the 84s, hit the 85s, the market stalled, gets up to the 90s. Again, note, if I just pause that for a brief second, okay, what you can see, when we came up here the first time, alright, the market stalled at 85. Someone took 120 contracts at the market. He then went even through him, so he went a lot higher through him, but note what he took on the offer, another 250 contracts at 90, probably another 300 to 400 around 87, 88. In total, someone has now absorbed 2,000 contracts on the offer in a space of 3 seconds. So straight away, you've got to know your market, okay? The Italian BTPs, on average, on a day, may trade, call it 60, 70,000 contracts. At this current point in time, we've done 40,000 contracts in the market. So now for someone to come out and do 2,000 contracts in a space of 3-4 seconds, and more importantly, he's selling it or offering it, is telling me something extremely significant about this market. It's telling that even though someone is buying 2,000 contracts, equally, someone is willing to sit very, very aggressively after big fundamental news and sell it. And that's the key, guys. So as the market popped up there a second time, note what happened if I rewind this fractionally. Let's watch it again. Let's see what happens at that key price of 85. So we can see at 85 we've traded 215 or 426. The market goes again, and straight away the seller hits the market back down, and we get back below those 85s. Now note, we started this, if I go back again, we started this entire move around the 79s. We're now back below the starting price of the market. So what you tend to see is you want to be looking now for a failed reversal. So the trick is simple. We know what the starting price was because we were watching our ladder, 79s. The market's now gone higher. It's pulled back below those 79s. We ideally want to see that market test and continue low, or test the 79s and then continue lower. Let's play this on and see if we can get that sort of a test out of the market. So we see the market's gone below the 79s. It's trying to go bid. It's trying to go bid. 6s trade, 7s trade, 8s trade. So note the 8s almost got traded out. Again, comes up a second time. The 8s got traded a second time for 23 contracts and got sold again. Alright, so we can see the market's coming back a third time. 78 trades a third time. 3 times over now the market's sold and it's gone back bid into the key reference point, which is the starting price. 3 times, not once, not twice, but 3 times the market has given you the opportunity for short side entry. Now I want to roll this back. I want to show you the exact same trade, just we're going to utilize the ladder on the right. Okay, so what we have on the ladder on the right is probably a more traditional market for most of you. That's the Euro-Dollar FX. So let's see, let's practice this now and see where the price starts. So we can see the market started at 108.22. Let's roll the camera and see what happens. So remember our price 108.22, that's our key price. So we see the euro sells off. Why? Because it's a larger take up than expected, which increases the supply of money in Europe. The market goes down, we come to those 14s, and note straight away the very aggressive V-shaped reversal. So as quickly as it sold off into the 14s, it's gone back, and notice where it stopped, 108.22. Okay, so notice how first time round, the market has paused at its starting price. Remember what I said, we wait for the market to get above it as it is now, we then allow it to retest our starting point, and we get in. So notice, market comes back off it a second time, comes into 20 and a half, 21s, not once, comes in a second time, and bid, okay, and notice now how the market all of a sudden starts to accumulate higher and higher prices. 2 different markets, right? One is a bond market interest rate in Italy, which most of you probably never even heard of. The other is the Euro-Dollar FX currency, which most of you have heard of. A very simple strategy with a very simple approach. Okay, you'll notice that euro does come back one last time to the 22s before then moving higher and taking out the high of the day. That's the key, guys. Remember, when you have this key strategy, it gives you minimum risk reward. Where does the stop go? Well, it's very simple. We don't need a very tight stop now, okay? If this momentum's there and the reversal's there, we know everyone's long the BTP, we know everyone is short the euro. So we can simply just put our stop somewhere just below break even and allow the trade to play out. That's our trade strategy for today. Now, what I want to show you is, I want to show you where we've seen this this very week and where you could potentially see this in the week ahead. Okay, so this past week we had the European CPIs on Friday. One of the most followed gauges, of all the European data. Why? Because, well, the European Central Bank constantly refers to it. Right? The core CPI, which was expected to come out at 0.9, actually came out as a miss at 0.7. So it was a 0.2 miss on the core numbers. A really, really big miss on the core numbers. And every trader around the world was thinking, well, shoot, such low inflation in Germany, in Europe, this is not good. The reaction in front of you is the European German bonds. And what you can see is in the first minute, the market went bid. So we saw that aggressive bid. The market did about 6-7 ticks to the upside. And straight away, someone not only just absorbed and reloaded it, but they then sold it, and sold it, and sold it, and sold it. And this strategy, guys, it doesn't just apply to the German bunds or the BTPs. It applies to every single market. The principle is simple. There's a new fundamental in the market that should make the market move either up or down. If it cannot, the positioning is what will create the aggressive reversal in the opposite direction. All you have to do is enter at the right time and make sure you manage the risk. It's as simple as that. Now note, where this fits into to this week's sort of whole topic of being delusional is that most traders are delusional. Why? Because most traders would be going, why is this German Bund going down? This inflation is 0.2 miss. This is massive. Why? Because they've been taught through their experience that a lower inflation number makes the bonds go up. And therein that is the delusional element. It's that delusion that ultimately will not just make the trader suffer, but will ultimately make that trader lose a lot of money. I hope a lot of you can find a little bit of something in that, a little bit of a little bit of something you can relate to there, because I want to hammer across that idea this week. Stop being delusional. Start being open-minded. Accept that you're delusional. I'm delusional. We're all delusional. But the moment we accept it is the moment we can start to develop solutions to become less delusional.